investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the PennyWise Financial Podcast, and welcome to the show. Welcome to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Today is July 13th. Where does the time go? I mean, we're almost halfway through the summer. And Wednesday, decent weather outside. I can say that the economy and the stock market is still feeling a little bit cloudy. But Sam, why don't you give us some insight on what's happening right now?
Sure, and honestly, it doesn't seem all that bad relative to the first 6 months.
I like that.
You know what I mean?
That.
I feel like some of the numbers, they might still be negative, but they're not as bad over like a span of 5 days, 10 days, stuff like that, as that we saw, the first half of this year.
The bloodbath?
Exactly.
The bloodbath.
All of that red, huh? So going into it, the Dow Jones down only about almost 1% the past 5 days. This month we're actually positive 0.2%. Okay. Crazy, but it's something.
Hey, we'll take it.
Year to date, as we know, we're still down about 15%. So that hasn't changed all that much. But S&P 500 over the past week, we're down just over 1%, similar to the Dow Jones. And similar to the Dow Jones as well, over the past month, we're up about maybe 0.2%. So, again, nothing crazy. And then year to date, still down 20%. Moving on to the NASDAQ, very similar. Over the past week, we're down just over 1%. The last month, actually, we're up over 1.2%. And year to date, still down over 20%, looking at about 23% in the hole for year to date.
Ouch.
But the Russell 2000 over the past week, it's been pretty flat. I got a 0.01% increase, so nothing there really. Over the last month, down only about 0.2%, and again, year to date, down over 20%, about 23.
Okay, so what you're saying is not a huge change in the year-to-date numbers, but it seems like we're slowing down on momentum as we're continuing to lose money, but not lose money as frequently, as aggressively as so you think maybe the market is starting to roll over.
Well, I'm hoping so.
I hope so too. I guess we'll take it. We'll take it in stride, right? We're halfway through the year. We're heading into the fourth quarter, already almost the first month of 3 in Q3 2022. And we're starting to see a little bit of change. So let's jump into the sectors. First, we look at the energy select sector. That's the XLE. And the energy sector is up about 20% year to date. That number has come down quite a bit. If we look at that in the last month, it's down 18%. And in the last week or so, it's down about 2.5%, 2.25%. So yeah, definitely a change. Crude oil has come down a bit. We talked about gas prices and fuel and energy coming down. I'm wondering what's going to happen in Europe with the whole issue with Russia and supply and things like that when the weather does start to turn. And that's only a few months away. I mean, it's not like 8 to 12 months away. You're talking, we're already in July. So in a few months, things will start to get a little bit cold. And hopefully things are okay by then, but I doubt it. Then if we look at the XLF, let me pull that one up. Not sure why that one didn't come up for me. The XLF is down 2% today. Let's see, financial sector. Come on, give me my numbers here. Year to date, wait a minute here. I'm pulling up numbers that are not right. Let's pull up the XLF. Try that again. Year to date, XLF, financial sector is down 20.9%. In the last week or so of trading, it's down about 2%. So even though interest rates continue to go up, I think the balance sheets of a lot of these banks, mid-sized regional banks, are very clean, right? These are not the banks that we saw back in '08. Very different. And then if we look at the next sector, which is real estate, that's the XLRE. Real estate is down about 20.7% year to date. And in the last week or so, it's down about 2%. So, very similar theme. Again, we looked at real estate, we looked at the financial sector, and we also looked at energy. And all three are pretty much following suit. Now, if we look at the digital currency, the Grayscale Bitcoin Trust, that's a GBTC year to date, is down almost 64%. And last week or so, it's down about 2.5%. But today, some shining light, I guess, up 1%. Pale comparison to 64% negative.
Yeah, well, I feel like this is the first day we've seen in a while where it's up at all, right?
I can't remember the last time I've seen these coins up. I mean, you have your days here and there, but whenever we record the show on Wednesdays, typically these coins have been down
Mm.
for the day, for the week, for the month, and for the year, of course. Then we move on to the Ethereum Trust. That's ETHE. Year to date is down 76.5%, and the
Wow.
last week down almost 7. And today it's positive 3.5%. So making a little bit of headway there. Then the Grayscale Litecoin Trust, that's LTCN year to date, 75% loss. Last week down about 3%. And today, of course, shocker, is up 1.28%. How about real gold? So we think of gold being a hedge against inflation, one of the hedges. We're looking at the GLD Spider Gold Trust. Year to date's down about 3.7%. And the last week it's down 0.25%. And today is up 0.75%. The problem is a strong dollar. So when you think of commodity prices have come down quite a bit. We talked about that on the last show. But commodities this year, early on in the year, were a good place to be, right? We saw rising costs, services, goods. We have supply chain issues. We have conflict in Ukraine. Conflict, it's a war. Let's call it what it is. Again, not making many headlines as of the late, but it's still there. It's still a problem. We have our own problems. CPI numbers came out today. And, essentially, when you look at cost of goods, services, you look at consumer spending, I have to imagine that it changes the appetite for us to want to spend and do things. I don't mean just you and I mean us as an economy where we're spending money. But if we look at gold, year to date really has not fared very well, down 3+%. And we were heading into an inflationary period, but you have rising dollar. I mean, we talked about Dave and Jay booking their trip to Europe, right? And I think the euro right now is almost trading in lockstep with the US dollar. That hasn't been like that for a very long time. Very long time.
Hmm.
So, I mean, if you're looking to book a trip to Europe, you're probably going to save maybe 20% of what you would have paid just even a couple years ago.
Yeah, so why do you think that is right now?
Well, Europe, I think, has a lot of issues, not just because of Ukraine, but what Russia's doing, what we're trying to impose some sanctions on Russia. And there's turmoil, there's conflict. Their economy is not as strong as ours. It's
Mhm.
less developed. When we were in Italy, and we took a trip to Spain, remember the old acronym, the PIGS. You've got Italy, Spain, Portugal, Greece, and
I actually don't think I've ever heard that
no,
before. The pigs,
okay, it
no.
might have been before your day. Might have been before your day, and those were kind of the troubled nations,
Mm.
right? And there are some issues. I don't know if you saw this the other day. Elon Musk. Elon Musk is trying to buy Twitter or was trying to buy Twitter.
I saw that he backed out now.
Backed out, right? Backed out of that deal. And now they're suing him. They officially sued him. I think the lawsuit started, yesterday or the day
I think
prior?
so, yeah.
But I think that the deal was around the 20 billion, something like that. In Sri Lanka, you know anything about Sri Lanka? Sri
Don't think
Lanka
so.
is in danger of default. The nation is actually bankrupt.
Hmm.
So they said Elon Musk could have actually bought them for about 20 some billion and owned an actual country. Imagine that.
I think the original Twitter deal was even more than 20. I think it
It
was like
probably was
46.
46.
Yeah, 46. So
So maybe the 20 billion will buy you Sri Lanka. I think that might be a better deal than Twitter. I don't know.
yeah, but does he want that responsibility of
I,
running a whole
I don't
country?
know.
Probably not.
I don't. Does he want the responsibility of Twitter? Like, think about this guy. So Elon Musk, brilliant guy. Early on, made his money with PayPal.
Mm,
I don't even know if it was called PayPal back then, but he's had a number of companies that he's built up, started from scratch. Right? Sometimes almost bankrupt. Many times almost bankrupt. It's not uncommon. I mean, a lot of these serial entrepreneurs will come up with a company, sell it for millions, do something else, pour a bunch of cash into it. It fails. They almost go bankrupt. Then they build something else. So he's got SpaceX, right? He's got Tesla.
mm.
He's got the solar, would they buy First Solar, one of the solar companies. And so they've developed that market, that EV space and green energy. And now Twitter. Oh, why Twitter? I'm curious. Is it because he's a little pissed off about the um the way it's being managed or monitored, censored?
I think it had something to do with that. I don't really remember exactly why he wanted to buy it in the first place. Some to do with, I think you said, like censorship and stuff like that. He didn't like the way it was being run, managed, along those lines. But I also can't remember why he wanted to back out now either. Do you remember?
Well, yeah, I do that. I actually know, and the reason I know that is because at 1:30 in the morning, a couple nights ago,
Mm,
before the lawsuit was filed, he posted a GIF that he made of himself
mm,
and laughing in different segments of this purchase deal. So he says, at the beginning of the onset, Twitter did not want to release numbers on bot accounts or fake
mm,
accounts,
right.
or it could be even terrorist accounts, but basically fake accounts, not real users. So now he goes to buy the company and, he wants more information. They won't release it. So he says, well, I have to back out of this deal because I feel like I've been lied to. I don't know what I'm actually buying. So now they sue him. And in court, what are they going to have to reveal? The records of how many bot
Fake
accounts they had.
accounts.
So
Yeah.
he's kind of laughing about this. So I
Mm.
wonder if this is all like a ploy. I mean, Elon Musk is not a typical guy. He's not the traditional guy that's going to come in and buy a company. And Delaware, I believe, is where the lawsuit has been filed. They frown upon this kind of activity and they usually favor in the side of the company. When you have a handshake deal, you have a signed agreement, you have a contract to buy something, you can't just walk away and say, I think I'm good.
Yeah.
Not typically. This is kind of an unusual case. And again, I'm sure Elon Musk and the law firm that he secured is going to have a pretty good standing. I don't know. We're gonna have to look and see what precedents they're using.
I mean, I got a feeling he knows exactly what he's doing though, because he's always got something like, even if he's getting sued, he probably saw this in advance. He probably has like an ulterior motive behind it.
It could be. I wonder if this is all just a statement, just to make a point. Like, hey, expose the fact that these companies, these social media companies, have such a stronghold on how people receive information, and they do. I mean, you can put a post that's very controversial on one of these social media platforms, really pump it up and get it shared and followed, and all of a sudden you're creating this havoc that people get so angry and amped up about, and it makes you want to do things that you wouldn't normally do.
Mm.
And again, I think those were some of the things that we started to see play out in the last 2 years, and I think he's had, I guess, enough of enough, and wanted to make a statement and try to fix that. I don't know if he'll be able to fix it, but anyhow, kind of a sidebar on Twitter stock and what's been happening there. So we just to kind of round up what we're talking about with the market, like you said, the trend seems to be slowing. The
Yeah.
losses are coming in instead of 2 to 3% a day, maybe 0.5% to 1%. And a lot of times, what we're seeing is the market might be down a few hundred points and end the day almost flat.
Yeah, that's actually happened a lot over the past few weeks.
I like that. Flat is not a
At
bad
least
thing.
in like the big three. You know what I mean?
What I'm thinking is when we start to see a flushing out of the normal stocks, that's going to be kind of the point where we see a bottom. And what I mean by that is stocks that you wouldn't normally sell. Let's say like an Apple stock. Apple stock, traditionally, a lot of people buy and hold. I mean, you have an iPhone. I know probably 90% of my friends have iPhone or Apple products. They have speakers, they have integrated systems, they have software, they have subscriptions. You're not going to cancel your Apple, your iTunes account because inflation is through the roof and they raised it 10 cents. I'm willing to bet you keep that thing forever,
Yeah.
and it's a pretty sticky product. It's got brand recognition, it's got brand loyalty. But to my point on that, on the stock selling, when we see the normal stocks being sold off, that's kind of the pain point where people say, you know what? I don't know if I'm going to make money in this in the next couple of months. I might sit on the sidelines, wait for things to recover. They start selling those stocks, those good, solid companies. I think that's where we're going to be closer to a bottom, where we start to see things round out, get inflation under control. Right now, the Fed has got to raise rates. If they continue to raise rates, it's going to be a bad thing for the stock market.
So why do you say they have to raise them again?
Well, they're going to have to raise them to, again, limit the amount of spending. We have to slow down the economy. When the economy is running too hot, it can have overheating issues. And that's kind of the environment that we're in right now. Again, not to bash Janet Yellen, but I'm going to bash Janet Yellen. I feel that in those times when the economy was booming, earnings were fantastic, spending was out of control. We should have been raising rates accordingly, and they failed to do that. They failed to do that. So now when the economy is starting to slow down, to raise rates to curb inflation and spending, I don't know that that's really a good plan for success. It's going to take some time and I think some big efforts. Anyhow, with that, let's take a quick break. We'll be right back with the show. Do you want help building and managing an investment portfolio that's right for you? One that will help you maximize growth potential while you're saving, help you generate income when you need it most, and eventually preserve what you've saved to leave to your beneficiaries? We do this day in and day out and take the stress and responsibility of making those decisions off your plate. Subscribe to our newsletter, read our blog post, and listen to our podcast to get a flavor of how we do things. Our firm is unique and capable of handling all your investment and insurance needs. Monarch Wealth Management, our guidance, your future.
Welcome back to the PennyWise Financial Podcast here at Monarch Wealth Management. My name is Sam Gueli, along with Constantine. And Cons, I've been wondering, and I know we've kind of talked about this a little bit, but I'm trying to figure out, why do people go see financial advisors? And I know there's a lot of different things you can do with using one, without using one. I guess my question to you is, what are the benefits? Why do the positives outweigh the negatives?
Yeah, I think that is first of all, that's a great question. And I think that the answer to that, the response to that is different for every single person.
I'm sure.
And there are certain clients that we work with that have different needs and different expectations. I've, over the course of since we opened the firm back in 2014, we've interviewed with prospects, and some of them had different levels of expectations. Some of them just simply wanted a vote of confidence. Like, hey, this is what I'm doing. I day trade. I do this. I do that. Does this look good to you? So it might be just an assessment of what they're doing or what they have, or kind of what their game plan is. But they wanted somebody else to kind of take a look at what they're doing and just say, yeah, looks great. Or no, I think we need to look at these areas because they're pain points. So that's one segment. And, for the folks that day trade, that have E-Trade accounts, TD Ameritrade, Charles Schwab, they place option bets, they use straddles, they use call, whatever they're doing. If they're doing those strategies on their own, they're not coming to work with us. Typically, they have all day. Those folks that I'm talking about are usually retired. They worked in some aspect or some element of finance, and they enjoyed it, right? You got to be passionate about it. My wife has zero desire to learn any of this stuff. When we talk finance, obviously I do this for a living, so it comes up in our own planning, and she wants to know enough, but not everything. She has no passion for it. So first of all, you have to have a passion, and you got to have the time and dedication. And for those folks who do have the time, that do it, that enjoy it, that trade, they're not going to be a good fit for us because I have a hard time adding value if they know. And a lot of times they know it all, right?
Yeah, right, exactly.
I'm not, so if it's, do I buy a McDonald's stock today or do I sell it? Well, that's a conversation. And I guess the only way to know for sure is next month, next year, next week, whatever it might be. Did the stock go higher and I told you to sell? Well, that was a mistake. See, I told you I would have been better on my own. Or did I tell you to hold on to it and it tanks?
So
Right.
that leads me to my next question is, even if you have a lot of people that do it themselves, they feel like they don't need a financial advisor to handle their money. Obviously, like you said, you do this for a living. It's your profession. You're very passionate about it. You enjoy helping people, and that's another benefit to this profession. But there's things that you know that they just don't, obviously. And
There
I feel
are.
like a lot of times people don't realize that. They might think they know what they're doing. Like you said, they know it all. But like I said, it's your profession. You know the little things that they're doing wrong, right? At least that's the way I kind of think about it.
So I love metaphors and I love correlations. I love trying to compare this world to
Mhm.
something else that I know. I just love, and I'll
Yeah.
do it multiple times because I
Mhm.
love the comparison,
noticed.
just the analogy. So you're a young guy. You seem like a fit guy. I used to compare uh, this field and what we do and what we provide, the services that we provide to a fitness trainer,
Mhm.
right? I've exercised for the majority of my college career and later on in high school, I kind of got into it. And then post college, and then as I had a family and things like that, I kind of slipped away from it. But anyway, point being, why do people hire trainers, right? Have you ever used a trainer
I don't use a trainer.
for
No.
sports or anything? They didn't have a trainer come in?
Well, kind of back in the day when I would play baseball, you'd
Okay.
have specific coaches. Like you'd go see a hitting coach, you know?
So there's an example, hitting
Sure.
coach. So basic fundamentals, when you're up to bat, you want to swing at good pitches,
Mhm.
right? And you want to avoid the bad ones.
Of course.
You want to make contact. You want to be consistent in what you do and bring your batting average up so that you get people on base, and you want to move things along to score points. And obviously, the more that you're able to do that on a consistent level, the better you are and the better your team is.
Mhm.
So it's not that the coach, the batting coach, is telling you anything you don't know. They're not coming in and saying, Sam, if you just move your thumb this way, you're going to start hitting home runs. And,
Yeah,
and you
yeah.
say, aha, light bulb goes off and says, you know what? I can't believe they shared that secret with me.
Mhm.
Because guess what? If that was the only change, as soon as he tells that secret to everyone, everybody's hitting home runs, right? It's not a science, what we do. It's not a formula. It's not an algorithm. It's not, hey, plug X into this spot and you get Y and then the result is Z.
Mhm.
It's not like that. If it was, I'd be out of business. There'd be no financial advisors. Everyone would do the exact same thing to maximize returns. We're all attempting to achieve that. But I'll tell you, the main reason that people come to me is not to maximize returns, to beat hedge funds. They're not coming and knocking on our door here on Monroe Avenue in Brighton, New York, to say, wow, these guys have something no other firm has.
Mhm.
They're going to destroy every mutual fund company, every ETF. They're going to destroy every hedge fund. That's not why they're knocking on my door. First of all, that's not their expectation. And that's not why they're coming to me. They typically, our clients will work with us because of number one, what's the number one thing you need in this business? Trust. You have to start with trust. You don't have trust, I don't care how good your products are. Because Bernie Madoff had a great product, right? Until he didn't. And what happened is he lost trust. And he lost trust when people found out he was running a Ponzi scheme, right? And so you have bad actors. And there's all kinds of regulation that we have to worry about. There's all kinds of things that we worry about on a day-to-day basis. So one of the things that I think we provide is, first of all, trust, is guidance, and then it's coaching, right? I don't know what Apple stock or Xerox stock or Kodak stock or GM stock is going to do next week, next month, next year. I don't know that. We think longer term than that. And it's not just looking at 1 or 2 or 5 stocks. It's more than just portfolio construction. It's management. Because guess what? You got $1 million and the market's down 50%. You've got 500,000. You just started working with me 6 months ago. Are you thrilled about that relationship? Probably not.
Mhm.
But if you trust me and you trust the process and you trust the plan and you know where our target is, you're not concerned. Some of our top clients think that way. They have the right mindset. It's a lot of coach. That's really what it is. It's coaching. I mentioned fitness. I mentioned the batting coach. You go to a dietitian. You think they're going to tell you to go to McDonald's and eat breakfast, lunch, and dinner? No. It's not news to you. You already know that. I know that. People that go to seek counsel from these people, they already know that, right? They're not going to give you a secret pill that's going to make you lose weight, feel great, and it's healthy and all the right things for you. At least I don't think they have that yet. Maybe I'm wrong.
Not yet, at least.
I mean, they got all these supplements. I tried so many supplements in college, and I could tell you most of them were a complete waste of money.
Yeah, they are.
It's, typically what you'll see fitness pros, you'll see athletes that show their face and they show the product. They might try the product and use it and like it. I don't know if it really had any impact on the results, right? Now, in our field, you ask, why do people come to work with us? I say the foundation first and foremost is trust. Is it because of performance? Can I brag about your account, your investment you have with me? No, you don't want anybody to know your business. It's one of the hardest things, one of the hardest industries to really acquire new clients, because you have your hands tied behind your back. You can't share performance. You can't share statements. You can't promise things. You can't guarantee things. You're always looking to be sued by FINRA or SEC or clients or whoever. There's a litigious society. And if you remember back in 2008, when the market crashed, what do you think were on all the billboards? Attorneys, advertisements on TV, on the radio, on the newspaper. Did you lose money?
Yeah.
You may be entitled to a settlement. Call my law firm. Right? And so, I was in the car industry when I graduated college. How many people do you think overpay for cars?
Probably everybody.
Just about everybody. Unless you're really savvy, you're a stickler about price, and guess what? The dealership probably doesn't want to work with you because they want to make money on somebody else. And we used to see it. We'd see these guys that come in and gals come in, husbands, wife. It's usually husbands that come in alone. They don't want to work with a salesperson. They ask, number one, to talk to the sales manager. I don't want to deal with an associate. No, I want to talk to the manager, the person that's making decisions. And what happens, have you bought a car yet on your own?
No, not yet.
Okay, well, what you're going to learn very quickly is, and if you want any help, let me know, because I can tell you every detail about it. You go in and it's a game. You meet with a salesperson, you drive the car, you get all cozy with it, you like the features, probably doesn't have all the chips in it when they sell it to you these days. But anyway, so you fall in love with the car, now you start talking price. All right, the sticker is $20,000. We can give it to you for $19,800. You want it? I don't know. I'll offer you $19,000. Well, I don't know, Sam. We're going to go talk to the sales manager. The sales manager's not there. You actually don't usually see the sales manager. You might be upstairs in an office. You might be in a glass room. You might be in a conference room, but they talk numbers. They look at profitability. How much can we make on this car? What do we think we could sell Sam this car for? And they have margins, right? And they try to do their best. So it's all a game, Again, when you're in there, you overpay and you leave. Is there really much you can do about it? No. How about overpaying at a store for a cost or service or good? You think you can go and have a lawsuit? Well, first of all, it's probably not a lot of money. Even if it was $500, $1,000. Investments are big money, right? Retirement accounts are big money. Real estate is big money. You see lawsuits with real estate too. I bought this house and there was damage in the attic. The previous owner was hiding it. He didn't disclose it in the statement. This is a $50,000 lawsuit. They go after him. It's big bucks, right? So it's really hard for us to market that way. Typically, most of our clients might be following us for a little while to build trust, to hear what do we actually do? How do we actually help our clients? What services do we provide? It's a lot more than just portfolio management. It's a lot more than picking the right stocks and owning the right companies and looking at earnings. We do all those things. The other thing that I think is worth looking at is I was having a conversation with somebody the other day. This is an existing client. And she said that she hasn't really looked at her statements much. And she asked me the question, do you happen to know, how things are going? I said, do I happen to know? It's my job. Unfortunately, I have to look at this every day, every trading day. Market's open and it closes, right? A lot happens from the beginning, from the open until close. A lot of times it flip flops, positive, negative, negative. Which way is the market going? We don't know. Good news comes out, all of a sudden market crashes. Why? I don't know. Then you see Fox News or CNBC has a headline: stock market crashes because of interest rates rising. Well, how do you know really what happened? Interest rates rising, by the way, sometimes can be a good thing too. What does it say? It says good things about spending. Next week is going to be a big week for earnings in the stock market. So that'll be something that we're going to want to have our eyes and ears glued to find out what these companies are reporting. Last GDP quarterly report was not good. If we see two of those negatives, you know what that means. It's not good news. But again, that's looking back, right? Those numbers that are being reported tells you the story of what already happened. We want to think 12 to 24 months out. We want to try to look where the puck is going if we're going back to a hockey reference. Again, another analogy in case you needed one. But yeah, so those are some of the things that we help our clients with. It's more than just the investment management. It's budgeting, it's income, it's setting goals, and it's setting a path, a course, a plan of how to get to those goals, how to reach those goals, working towards those goals. Just like you would if you wanted to lose weight, if you wanted to exercise, if you had a batting coach. All right, what's our target result? Is it to hit, if it's your batting coach, is it to hit a home run every single time you're up to bat? Probably not. It's unrealistic. Is it to take $100 and turn it into 100 million? Probably not. That's not very realistic. Maybe over time. Really like to see how you'd make that work, but setting realistic goals. And I think that's why people come to work with us. It's usually referrals. It's usually people who have heard good things about us. It's trust. And it's a lot more, again, it's coaching, it's planning, and it's a long-term relationship. We don't get paid big commissions to come in and work with us. We don't charge a huge retainer fee to come and work with us. It's on an ongoing basis. It's based on your performance, and that has a direct impact on my paycheck, on the firm's paycheck, and how we get paid. If you're making money, we're making money. If you're losing money, we're obviously reducing our fees. So does that answer your question? Do you think that gives some insight for people and why they work with us?
It answers my question. It definitely goes above and beyond too.
Yeah, it's probably a little bit of a rant or ramble, right?
Well, like you said, you're passionate about it, so
I am. I'll give you that. I'm definitely passionate about it. I love what I do. If there were more hours in the day, I probably would work more hours if I could. There's some pro bono stuff that we do, obviously, where we can help. But if it helps our clients, if it's something worth noting, it may not have to do with a stock or a bond, but if it could save them money in another aspect of their life, which means more potential for income, more money to save and invest and grow and protect, I'd be happy to do it. With that, let's take a quick break. We'll be right back with the show. Do you have a high deductible insurance plan? If so, have you set up your HSA? There's a ton of people who don't know what it is or how it works. Even worse, there aren't many people who can give you advice about how to make the most of these powerful and unique programs. Not many advisors focus on this in their practice, don't understand the mechanics of how they work, or even where to begin helping their clients. Reach out to me, Constantine at Monarch Wealth Management, and I'll guide you through this process and get you on track to make the most of your high deductible plan and your superhuman HSA. Welcome back to PennyWise Financial Podcast. Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Welcome back to the show, everyone. So let's take a look at some of the highlights in article. I got a few articles here in the Wall Street Journal. Actually, before I dive into that, the annual survey that came out, the top rankings. Let's start there, Sam. So these rankings were done by CNBC, and they do this every year, right? Let's run through the list of top states for business in 2022 in the rankings. What's number one?
Yeah, so number one actually doesn't come as a surprise to me. That's North Carolina. And what I've realized just by knowing a lot of people from Fairport, Rochester, my age, is that so many people are moving out of Rochester, going down to either Charlotte or Raleigh or, any of the other cities down there. And they're up and coming cities are they're going crazy when it comes to people moving there. So it makes sense that that's right now the best state to do business in because there's all these like startup companies, all these modern companies, and I've heard really good things. My cousin lives in Charlotte. My other cousin lives in Raleigh. They say there's so much to do there. I actually visited Raleigh a couple years ago. It's an awesome city. But like I said, it makes sense because, it's really up and coming and a lot of good stuff there.
So before we dive into the survey results on what categorizes or what categories they use to identify which state was the best, let's just think about living for just a minute, because Carolina actually comes up as one of the top places to live in retirement.
Do they have, sorry to cut you off,
No,
do they
it's fine.
have income tax in North Carolina too?
I believe they do. It's probably state income tax. I believe it's lower than ours. Again, I have
I'm
to.
sure it
I
is.
have to. Yeah, I'm pretty sure any state is,
Yeah.
besides California. But yeah. So from a cost standpoint, you've got property taxes, which are much less than ours, right? New York State is pretty high across the board, depending on the county and in which town you live in. Ours are okay in Victor, but not typically the place you want to run to if you want to save money on property tax. New York State does not come to mind, upstate New York, although we have a lot of other good reasons to live here. So that's one thing. So reduced state income tax, reduced property tax. How about weather? So very similar to us as far as having the seasons, but it's a more mild winter. I don't think they get much snow.
Yeah, I don't
if
think
any,
they get.
right?
Yeah, I think you always hear stories about people in like North Carolina closing schools because they get like half an inch of snow.
Well, I spent time in Jersey. Well, after college, I worked for a casino, and I lived in Ventnor, and I can tell you they did not have snow equipment. And when I tell
In
people
New Jersey?
in Jersey, now I was Atlantic City, which is like the shore.
Yep.
Okay, so typically we don't get much snow. We didn't get much snow. If anything, maybe every now and again you get an inch or two. That's a big deal. And when I would tell friends from back home that they don't have snow equipment, no plows, no trucks, no salt truck, they couldn't understand. What do you mean you don't have? I mean, you could get snow. Yeah, you could, and it happens usually a couple times a year in the season. But when it happens, everything shuts down. So you get an inch of snow. That's it. Everything is shut down. The cost to store those trucks and the salt and the plows and have staff for them for the couple times a year is astronomical. Not to mention maintaining them if they're just sitting there. So it doesn't make sense. But yeah, the seasons in Carolina, I heard, if you're looking for something mild where it's not just sunshine all year round, it's not like a San Diego. You still get to see the seasons. You still get to see the fall, the winter, a little bit of a mild winter. So from a weather perspective, it's pretty darn good, right?
Yeah, I mean, we used to go down to Myrtle Beach. That's North Carolina, right?
I honestly don't know.
It's either
I've never
north or
been to Myrtle
south.
Beach myself. It
can't
might be
remember.
south. I don't know.
It's one of the two. But we used to go there and play like spring training baseball in high school. And we'd go in March. So obviously it's so cold up here. And pretty much every time we got great weather down there.
That's a good time to go.
Yeah.
March is kind of like the winter here is dragging on and you want it to be done.
Yeah, you're totally sick of it at that point.
I mean, we still get, frost, we get snow, we get ice sometimes in April. Depends,
I think we did this year, right?
Yeah, absolutely. It does. Again, it's not every day, but so those are some things to think about. Housing, I think, is pretty affordable. So there's all those factors that play into it, not just in retirement, but even for families that wanted to move now. Like, and again, to your point, I see a lot of people moving, weather, taxes, homes, lot of things to do. So those are some of the reasons. But when it comes to this survey, this top ranking in states for business, they look at a few things. Number one is workforce, infrastructure, cost of doing business, the economy, life, health, and inclusion, technology and innovation, and business friendliness. And so I saw the governor was on this morning when they delivered this report, and he's a Democrat. And apparently what they've done in that state is they've reached some bipartisan agreement on a number of topics. So it's this unified effort to make the state better. And again, he said, we have a lot of jobs, a lot of innovation. We're still competing, with other states to make sure that we're one of the top ranked, in which they are number one. And I believe in the last 5 years, they've ranked always in the top 10. This is the first time they've been number one.
Wow.
So that's a huge feat. That's a good reason. And the economy there is ranked number one.
Really?
Number one. Life, health, and inclusion is their worst ranking category. And I think they have some things to work through. But again, you're kind of in I guess that would be considered the South, right? You're just
I think
south of the
so.
border,
Yeah, you're
kind of
getting there.
midway through the U.S. Decent weather, good for business. Now, how do we rank? How does New York State rank?
Oh, we were what, 36? I think
36.
35, 36.
So 36.
I'll be honest with you though, Cons, I expected us to be almost dead last. So
I did too. I did
at
too.
least it's a bit better than you might think.
I did too. I mean, you know our status here. I think it's a great place to raise a family. The winters can be brutal. The weather, high income tax, high property tax, very difficult to do business. So how do they rank us? So business friendliness, we're ranked 44 out of 50, so almost dead last. The top ranking category that they have us listed for, let's see here, number 2 out of the 50 states is technology and innovation.
Well, does that include New York City?
It does.
So
it does. And that, again, I think that's, not really a surprise to us. The worst ranking category for us is workforce. And again, because of that point that you just made, it does include New York City. And, we still have, so when it comes to workforce, right now, one of the hardest hit industries besides restaurants and the service industry is airlines. We mentioned this last week.
Yeah.
Now, recently, I've talked to a few friends and colleagues, and they've mentioned a few people that I happen to know that are now new hires for these airlines with benefits, 401k, and whatnot. And it's shocking. And it's shocking in a bad way, in a scary way, to think that these people that I happen to know, these individuals, are working for an airline where safety comes into play, and things like that. They're not the people that I would think I would want to appoint to be in charge of my health and welfare on an airline.
On a plane.
And so I think that a lot of employers right now are reaching, they're stretching, they're offering jobs to people that wouldn't normally qualify just to get bodies in place.
Yeah.
Kind of scary.
That is a little scary,
right?
actually.
You're hopping on an airplane, your life could be in jeopardy. And then even on a more mild note, you know how scheduling is with airlines. They're always delayed. There's flights that are being canceled. Again, issues with employment and finding bodies to fill the spots. The pilots and the stewardesses and whatnot. So there's a number of issues, I think, challenges in the workforce, not just that one industry, but as a whole. So that's kind of where we rank. And who's dead last? Who's dead last on this report?
What was it?
Number 50 is none other than Mississippi. And they rank in the bottom of just about every category. Just about every category.
Why do you think that is?
I don't know. I don't know enough about Mississippi to comment. We're a little far from there. I don't think it's impacting any of our clients with their investments as far as businesses being housed in Mississippi. But I thought kind of a good survey to see where we rank and to see who the top spot is. And Carolina, again, I don't think was a surprise to you or any of our listeners. What else do you have in the journal that's worth noting?
Yeah, so something that caught my eye immediately and we can all relate to is this article here talking about gas prices. Now, apparently they're falling as demand is easing. So I guess the price of gas in the United States has fallen for 24 consecutive days after previously hitting a record high. Now they're saying it might rise again as the demand increases, of course, but they said over the past month or so, it's looking a little bit better. So, I mean, that makes me hopeful. You know what I mean? Because I mean,
hopeful for gas prices or the economy or the stock market. Because I'll tell you what I think
all of the
in just
above.
a second.
But I think we've talked about it before. Sucks because you have to spend all the money on gas when you pull in and see it's like $5 a gallon. You're like, oh my God.
I know. I guess the people that are working from home just got a raise in a sense, right?
I mean, yeah,
Because you're
can
saving on
definitely
gas,
look
you
at it
don't have
that
to
way,
drive
for
anywhere.
sure.
I mean, that's a huge score. You just added a tax-free benefit, right? Because you're
Mhm.
not having to have that come through your comp and pay taxes and whatnot on that, and you're getting the benefit. But to me, when I hear that falling gas prices, initially I'm excited, right? Because that means that we can go a little further in our spending, right? But in a sense, that also tells me I should be a little bit concerned, a little bit worried about the reality of a recession.
Mm.
If the demand is coming down, and that's what's happening here, it's the demand that's coming down.
Yep.
The supply is essentially the same, right? There's been some temporary pockets of relief where they're releasing additional supply, but that's helped a little bit. These tax holidays on gas has helped a little bit. A lot of proposals being kicked around, but the demand to me is a worrisome result
Yeah.
because if the demand is going down, this is a time when we see typically a lot of travel, right? Kids are off of school. People want to get out of Dodge. They want to go to the beach. They want to go places. They want to go visit family. And if the demand is going down, that means people are spending less. Maybe the economy is slowing too fast. And again, next week, we're going to hear a lot of reports, earnings reports from businesses. It's going to be a really, really important one to look at. Seeing the results of the first quarter, not so good. Results from Q2 coming in. It's going to tell us the story of what's happened. And I have a feeling it's not going to be that great. Time will tell. Again, not trying to time the market, but I think we have to be cognizant of what's happening and try to make adjustments as need be. With that, I think that's all the time we have for today. Thanks again for listening to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with Sam Gueli, my co-host. Thanks again for listening, everyone.
You've been listening to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is PennyWise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.